shillings in August to 235.6 billion Kenyan shillings as Kenyans opted to have much of their money in savings. The sharp drop now represents the biggest fall on one month-to-month basis since the demonetization exercise in 2019. David Kasembeli reports.
Data by the Central Bank of Kenya (CBK) shows that metric, which is an indicator of prevailing economic environment, had risen to an all-time high of 242.8 billion Kenyan shillings in July as schools reopened for the first term of the adjusted academic calendar. Despite the 3% drop in cash circulation, the average value of money in people's pockets in the first 8 months of this year has improved mainly on a recovering economy. The average value of circulating cash in the first 8 months of this stands at 229.8 billion Kenyan shillings, a rise of 13.3% from 203.3 billion Kenyan shillings over the same period last year. Improved consumption brought by increased income and removal of pay cuts, new hiring and easing of restrictions to combat the pandemic has been critical in helping the economy recover. According to Kenya National Bureau of Statistics data, the unemployment rate by strict definition had fallen to 6.6% at the end of March this year, from a record of 10.4% in June last year. At the height of the COVID-19 pandemic, cash circulation fell to a low of 194 billion Kenyan shillings in April last year as the country was going through its first wave of infections and struggled to go past the 220 billion Kenyan shillings mark until October. With the employment rate hitting a record high of 10.4% in June, the pandemic battered many Kenyans, leaving them unable to pay rent, afford decent meal and meet their daily needs. We were able to speak to Vincent Kimosop, who is an economist, and we as Lookup TV wanted to know what this really means to the economy of this country and what are the effects of the decrease of the value of cash circulation in this country.
First of all, it's a good thing. It's not a bad thing. So it's good to indicate that it's not a bad thing, in the sense that, part of the tools that the central bank uses to control monetary policy and ensure that they have a greater oversight on currency circulation includes regimes established. So it means there are reduced incentives for keeping money outside. And also it is a pointer towards the recovery that we are seeing slowly happening as a result of the reductions or the slowdowns and the removal of some of the COVID-19 measures that had been instituted. So in terms of the impact on the economy, the pointers towards people starting to release money and also put some to help them on a rainy day.
We also asked Kimosop that what are the factors that prompted Kenyans to start having more savings in their own pockets, but not in the banks.
The slowly recovery of the economy. You also know we are gearing up towards an election and schools reopening, so the resumption of activities. Because when people put money into the formal systems, it's because it is through those channels that provides the intermediary roles and facilitating of payment. Part of the central bank and part of the banking role of the banking system is that it is the payment system. It's the channels that we use towards taking advantage of one of the sources and purposes of money, which is a medium of exchange. So when you see people moving money towards the formal systems in terms of the banking system, there is a pointer towards the direction in which the economy is taking and also the resumption of activities. And also getting money into such spaces where their savings so that they can utilize in terms of when there are challenging moments or tough economic times.
Recently, the economy has been tough due to COVID-19, and many Kenyans have been suffering in raising money, and we wanted to know where this money is really concentrated.
Let's look at the data because the part of we can be able to tell with certainty when the data is disaggregated. So at the moment, since the report has not been is not publicly available, you can be able to give a general direction on pointers on the trajectory that the economy is taking. It could be high net worth individuals who had kept their money in their saves and in their homes, returning this money. So then you'll see that in terms of the quantums and the volumes of money available. But also if the data is broken and you can see a spread, it tells you that there are more actors participating in the economy. At the moment, we will have to look and break down the data to speak with certainty about where the money is concentrated.
David Kasembeli, Look Up TV, Nairobi.